Okay, Assalamualaikum. So now we are going to learn a new chapter, Consumer Mathematics Insurance. Okay, so what will you learn in this topic? It is risk and insurance coverage. Risk and insurance coverage. Okay, why do we study this chapter? Okay, the knowledge on risks and insurance as a financial protection is very important for every individual as a preparation for the future. It is also very important in personal financial management because we might use a part of our income for insurance. Okay, so we often come across news and headlines in the media of families being affected by disasters such as flood, fire, theft, and accidents. Have you ever thought that you and your family might face such a disaster in the future? If so, is your family ready for it? If it happens to us, we would definitely have to bear the financial losses. Therefore, it is very important for you to understand the importance of insurance because insurance helps us to face uncertainties and losses. Okay, firstly, we want to explain the meaning of risk and the importance of insurance coverage. Risk. What does it mean by risk? Risk is the possibility of a disaster that cannot be avoided. So you must remember the important elements in the definition of risk are: risk is unpredictable, risk involve losses. Okay, so insurance will give financial protection if unfortunate events happen to you. For example, as a student, facing risk is unavoidable. The risks that you might face are meeting an accident on the way to school, getting injured in a football game, or falling down the stairs while going to the library. So, in spite of being careful and practicing a healthy lifestyle, there are still some risks you might face. Hence, with insurance that is available to all ages, you will be given a financial protection if unfortunate events happen to you. Okay, so next, let's learn some of the terminologies used in this topic. Okay, first is the insurance company. Okay, after this, we are going to learn what insurance is. Okay, first, the insurance company is the party that agrees to pay compensation for the losses of the agreed terms. Okay, insurance contract is a policy and an evidence of an agreement made between the insurance company and the policy holder. Next is the principle of indemnity. Insurance companies will pay compensation to policyholders in the occurrence of a loss insured for an amount not exceeding the loss incurred, subject to the sum insured. Okay, what is mean by policyholder? Policyholder is the individual who will claim and receive compensation for the losses, the one who bought the insurance and pays the premium. Okay, so next, insurance. Insurance is intended to transfer risk. Okay, the key word is to transfer risk from individuals to insurance organization. It is a contract signed between the insurance company and the insurance owner. Under this contract, the insurance company promises to pay compensation for the loss covered in the policy in return for the premium paid by the policyholder. The amount of compensation payable to the policyholder is only the amount of the loss suffered. This is because the key principle in the insurance system is to restore. Okay, the key word here is to restore. Restore the financial position of the policyholder to the pre-loss condition, which is also known as the principle of indemnity. Therefore, the insurance principle will not allow the policyholder to gain profit from the insurance purchase. Okay, the policyholder pays a premium to the insurance company, and the insurance company will pay compensation for any loss incurred. Okay, so for this topic, you're going to learn about two different insurance. One is life insurance, another one is general insurance. Okay, let's first go to the life insurance. The purpose is to provide financial protection to family members who depend on the policyholder when the policyholder dies, and also to provide compensation if the policyholder suffers from a total and permanent disability. Okay, the risks covered by life insurance are death, loss of ability, and critical illness. Okay, so what is general insurance? General insurance provides coverage against any loss or damage incurred apart from the risk covered by life insurance. There are many types of general insurance. Okay, so for the under life insurance, for the second purpose, you see the word, you see the purpose to provide compensation if the policyholder suffers from a total and permanent disability. So I want to go further in total and permanent disability. We call it TPD. Okay, one is unable to perform the daily living activities and never be expected to ever work again. A totally and permanently disabled person has to fulfill the following condition. 1. Total and irrecoverable loss of sight of both eyes. 2. Severance of 2 limbs at or above wrist or ankle. 3. Total and irrecoverable of loss of sight of 1 eye and loss by severance of 1 limb at or above the wrist or ankle. Okay. So next, the general insurance. In your textbook, there are 5 types of general insurance. Okay, actually there are more. Okay, the 5 are personal accidents insurance, fire insurance, travel insurance, motor insurance, and medical and health insurance. Okay, the most famous one is the medical and health insurance. So here, the medical and health insurance, one is hospitalization and surgical insurance, second critical illness insurance, disability income insurance, and fourth hospital income insurance. So there are even so many types, okay, of medical and health insurance. Actually there are more. Okay, these 4 are the ones that the textbooks want you to learn. So here I show you some of insurance companies in Malaysia: Zurich, Great Eastern, Prudential, Alliance, Etiqa, AIA, Sun Life Malaysia, Takaful Malaysia. And here some screenshot of Great Eastern products of insurance, such as life insurance, health, wealth accumulation, home insurance, personal accident, travel, motor insurance, and other insurance. Actually there are more. Okay, so I just show you a few. Next is group insurance. Okay, so group insurance, there are 2, for organization and for students. Okay, for organization, it's a financial protection to employees of an organization in the events of death, disability, hospitalization, and surgery under certain policy and coverage limit. And for pupils, financial protection to pupils in the events of death, paralysis, disability, and wheelchair allowance, and wheelchair allowance under certain policy and coverage limit. Okay, in Malaysia, the MOE, Ministry of Education Malaysia, has implemented a protection scheme for students of government schools and government aided schools under the Takaful Pelajar Sekolah Malaysia scheme. Okay, so some of other terminologies used in this topic as premium. Premium is the regular amount of premiums payable to the life insurance company, which is based on the insured attained or future age, smoker or non-smoker status, and health condition at the time of policy application. The insured person is the named person whose life is covered in the insurance policy contract. Death benefit is the amount of insurance money that the beneficiaries receive from the insurance company upon the death of the insured. Face amount is the sum assured, which is the amount of insurance cover that the insurer will pay at the insured beneficiaries at the point of insured's death. Okay, look at the terminologies. So why insurance? So insurance as a financial aid to the family in the occurrence of your disability, critical illness or death, paying for high medical expenses as compensation for losses incurred, and managing life expenses, debts, and commitments in the event that you are unable to work. Okay, so next, you want to calculate the premium for life insurance. Okay, for life insurance, the amount of premium paid depends on the chosen face value, age, gender, and smoking status. This premium calculation is based on a premium rate schedule for every aggregate face value. Okay, so this is the formula in the yellow box. So let's look at example 2. So the annual premium rate schedule per 1,000 ringgit face value of a yearly renewable term insurance offered by Syarikat Insurance XYZ is as follows. Okay, for age 35 to 40, male and female, and their smoking status. So the first question, why does the premium rate increase as the age increases and for a smoker? Okay. So basically, with increasing age, our life expectancy of will decrease. So we will need to pay higher premium. For a smoker, the probability of a smoker being exposed to illness is higher than that of a non-smoker who lives a healthy lifestyle. So they got to pay a higher premium because they are more exposed of getting more critical illness. So the insurance company will have higher probability to pay their insurer the money to the hospital. Okay. Next, based on the table, calculate the annual premium for each of the following situation. Mr. Guan wants to buy an insurance policy worth 100,000 ringgit. He is 39 years old, healthy, and a non-smoker. So we just have to use the formula for premium. Okay, so from the table, the premium rate for Mr. Guan is 39 years old, healthy, and a non-smoker. Mr. Guan, male, non-smoker. So 2.49. Okay, so 2.49, the premium equals to face value of the policy 100,000 divided by 1,000 times 2.49. So the premium is 2.9 ringgit. RM 249. Okay. Number 2, Madam Shapova is 36 years old, healthy and a non-smoker. 36 years old, Madam Shapova, non-smoker. So 1.5. She wants to buy an insurance policy worth 250,000 and wants to add on a critical illness policy. 30% of basic face value, and the premium rate is 1.77 per 1,000 based on Madam Shapova's health status. Okay, so we want to calculate the premium for Madam Shapova. So from the table, the premium rate is 1 ringgit and 50 cent. So the total coverage for critical illness, total coverage for critical illness is 30% times 150,000, so equals to 75,000 ringgit. So the premium is the annual basic premium plus the annual additional premium for critical illness. So the basic premium is 250,000 divided by 1,000 times 1 ringgit 50 cent plus the 75,000, okay, divided by 1,000 times 1.77. okay, the 1.77 is given in the question. Okay, given in the question, so we just add up these two. 375 ringgit plus 132.75, so equals to RM 507.75. okay, so the annual premium for Madam Shapova is 507 ringgit and 75 cent. How to calculate a premium for motor insurance? Okay, so first let's learn a little bit on motor insurance. Motor insurance is calculated based on the motor tariff that provides the minimum premium for the insurance coverage. Okay, the minimum premium. These tariffs are regulated by law. The amount of the premium depends on the factors such as the type of vehicle and its usage, the engine capacity, the type and amount of coverage desired. The premiums charged are different for each motor policy. So basically, there are 4 types of policy: ACT, third party fire and theft, and comprehensive. Okay, so the comprehensive means the all-in. Okay, so the ACT policy is the least. It depends only on the engine capacity of vehicle as well as the third party policy. So for the third party fire and theft policy, the premium rate is 75% of the comprehensive policy's basic premium. Okay. Okay, so let's look at the motor tariff. Okay, so here is motor tariff. The formula to calculate the basic premium of the comprehensive policy is as in the yellow box. Okay, so there are two for Peninsular Malaysia and for Sabah and Sarawak. So these two are a bit different at the additional part. Okay, here 26 ringgit, here 20 ringgit 30 cent for each 1,000 of part thereof on value exceeding the first 1,000. Okay, so here is the CC, Peninsular Malaysia, comprehensive policy, third party policy. Okay, So next, an example. Another example, example 3. Encik Ramli owns and uses a Proton Ixora 1.6. Okay. In Peninsular Malaysia, the information of the car is as follow. Engine capacity 1600 cc. Peninsular Malaysia. Calculate the gross premium. Okay, the gross premium for Encik Ramli's car under the comprehensive policy, the third party fire and theft policy, and the third party policy. Okay. So first is for comprehensive. Okay. So for comprehensive, we know that the first 1000 ringgit must follow the motor tariff. Okay, so 1600 just now. So here, second row, comprehensive 305 ringgit 50 cent. Okay, so 305 ringgit 50 cent plus 26 ringgit for each 1000 or part thereof of an value exceeding the first 1000. Okay. So the premium is RM305.50, and we know that the sum insured is 60,000 ringgit. So for the first 1000 is 305 ringgit and 50 cents. So we need to add 26 times 59. Okay. So meaning the basic premium is RM 1839 ringgit and 50 cents. Okay, the NCD is the NCD means no claim discount. Okay, so meaning last year Encik Ramli he didn't met any accident, so the car is accident free, so he got the 25% less. Okay, so after NCD, okay, the NCD 25% NCD, so 25% times 1839.50 equals to 459.88. So after NCD, the gross premium is RM 1379.62. Okay. Next is for the third party fire and theft policy. Okay. So we know that one is 75% of the comprehensive policy's basic premium. Okay. So the basic premium for comprehensive just now was RM 1379.63. So the NCD 25%, $344.91. So for this one, the gross premium after the discount is RM 1034.72. Okay. Next, for the third party policy, The third party policy is just the basic premium minus the NCD. Third party, the premium, the basic premium. Okay, so get back to the motor tariff. Third party policy here, RM135. So the gross premium is 75% times RM135, so it is RM101.25. Okay, so that's all for now. We'll continue more during our online class. Thank you.